The House is expected to pass the Inflation Reduction Act, opening the potential to ignite some upside to clean energy suppliers. For more on what this means for the energy space is Rob Barnett, Bloomberg Intelligence Senior Clean Energy Analyst. Good to see you in person. Thanks for coming down.
Thanks for having me in the studio.
Let's start from the auto perspective, because we keep looking at the Inflation Protection Bill and legislation, what it means to like a Tesla or Rivian. And I think Rivian went into great detail on their conference call last night. It may not mean much because of the caps on it. How big a problem is that?
Well, I mean, all of this stuff is very long lead time. And it's got this sort of rather almost Orwellian name, the Inflation Reduction Act. Is it going to do anything for inflation in the near term? It's really hard to say. And it is going to provide a demand boost for a lot of technologies, EVs, wind, solar, batteries, hydrogen. There's goodies in there for anybody looking at the clean energy space. But none of it's overnight. You got to think this bill is going to unfold over the course of 5 to 10 years kind of range.
Okay, and so last time we spoke, you were in the UK, and you've been able to make your way over here. Thank you so much for joining us in studio. So with all of what we've seen play out in the region as well, we were talking about a heat wave back then. On the international energy front, where have things started to settle right now, and can that kind of sustain itself?
Well, so the world has actually changed a lot because of this Inflation Reduction Act. If we were talking about some of the names that we cover, sort of a First Solar, a Solar Edge, which makes inverters, SunPower, which installs solar panels, the median company in our solar theme basket was down about 8% at the mid-year. Right now, they're up about 13%. So we've seen this sea change, and it is being driven not just by the policy front, but by this tremendous sense of demand and by this energy crisis that we were talking about last time.
Yeah, Rob, I'm looking at a First Solar right now. Past month, of course, a lot of that reflects the reaction in the market after the act, up 65%. I mean, is that just too much, or are these companies, these solar companies, going to see a boom in their business?
Well, I think from a demand perspective, the fundamentals look good. But if you're looking at traditional valuation metrics, EV, EBITDA multiple, these kinds of things, they're very stretched for a lot of these companies. Now, over time, we see these sort of names growing very quickly. So it's, can you be comfortable with a high valuation if the growth is there? That's the kind of calculus you're going through if you're looking at the solar space right now.
You mentioned a First Solar and some other solar names. You didn't mention Tesla's solar business, Solar City. Are they going to be a beneficiary of this?
Well, I think all of the solar exposed names can really benefit from that demand push. And one of the things that Tesla is doing, and all of their competitors are, is attaching batteries to the project when they're installing the system. So we're seeing tremendous growth on the battery plus solar business over the next 12 months. How
many years to make some of these investments real so that consumers feel them, so that businesses also feel the impacts of it as well?
Well, it's real today, and it's growing fast, but it's a multi-decade process to imagine really doing the energy transition. So in the near term, these are investments that can make a lot of sense right now, particularly if you're in Europe or a place with really high commodity prices. I mean, the gas price in Europe is over $60 per MMBTU. It's 8 and change here. We're talking about an 8x difference. So there's a lot of economic incentive to get these kinds of technologies in the ground.
So as a follow-up to that, because that would make the midterm elections, that would make even 2024 extremely important for continued investments, even when we're seeing the passing of the baton from elected officials as well. And so what do you expect to hear, not just in the midterm elections, but even as we go into the next general election, on how important some of these investments are?
Well, there's one more piece of the policy equation that's not being tackled in this so-called Inflation Reduction Act, and that's the permitting side of the equation. Now, the oil and gas folks, they want to be able to get their projects done. Guess what? The wind, solar folks, they also need help getting projects across the finish line. The hardest part of getting a lot of solar, wind, or oil and gas projects through is getting them approved. So if there's any easing on permitting, reducing that NIMBY complaint, it's a good thing for all energy developers.
I just keep going back to First Solar, Rob. And to your point, I mean, the PE ratio on this thing trailing is 65 times. That's almost 4 times the market multiple on the S&P 500. It's huge. But the supply chains for these solar companies, are they are they set up to handle this influx of what could be strong demand?
Well, we have seen a tremendous uptick in polysilicon, which is the input for the solar industry. It's what all the panels are made of. Last year, prices went up 3x. So a lot of folks are familiar with the price they're paying at the pump or gas prices even. Those are up a lot, but the input costs for the solar industry up 3x. Input costs for the wind industry, key component, steel. Steel is about 70% of the mass of a wind turbine. Steel prices are still up 2x compared with pre-pandemic levels. So they are wrestling on the profit side of the equation right now, despite that tremendous demand uptick. And so over time, one of two things will happen. Either we'll get those commodities back in check, or they'll pass those costs on to their customers.
Rob Barnett, Bloomberg Intelligence Senior Clean Energy Analyst. Thanks so much for joining us here today, Rob. Appreciate it.